Well, good afternoon or good morning, depending on your location. My name is Lyon Cruz. I'm the president of the coalition, and it's my pleasure on behalf of IMA Higher Education and the coalition to welcome you to our webinar, Protecting Assets and Reducing Cost, Approaching Insurance and Risk Management During a Hard Market. In addition, I'd like to thank you for spending your valuable time with us today. Now, before I hand off the presentation to IMA for a more technical part of today's discussion, I believe it's really important for you, the attendees, and those that may be listening to this recording in the future, to know the extensive research and vetting effort that was performed by the coalition to select IMA and this insurance program. Now, as you know, the coalition is the only national purchasing organization devoted exclusively to private nonprofit higher education. The coalition is also unique as we are governed by our member state associations for private nonprofit higher education. We exist solely to develop programs for our members, the state associations, who then offer these programs to you all, their member schools. Now, one of these programs is the one we're discussing today, the Coalition Property and Casualty Insurance Program, distributed and managed by IMA. The coalition canvassed the market of national insurance brokers and carriers for well over a year, looking for the right insurance product to leverage the power of our over 1,000 private colleges and universities. Now, most brokers wanted to start a new program and required a critical mass, a commitment, if you will, of 10 to 20 schools. They wanted to develop the program and rate structure only after the schools committed to using some theoretical model. Now, as a former vice president of finance at 2 colleges, I knew that just would not work because we as college administrators, we simply do not commit to something unknown. Finally, in IMA, we found the solution. The solution was that this solution will access an existing nonprofit insurable base that we can leverage. And more importantly, there are insurance carriers in this program that have agreed to underwrite the program based on the size of the group and not the individual schools. You'll hear more about that later. Combining these factors provided significant reduction in premiums for our schools, but without compromising deductibles or coverage. Now, the coalition spent another year fine-tuning the program with IMA to achieve the program that you're going to hear about today. With that much time and effort, you can imagine that I am very proud to offer this program to my members, the state association, and you all as their member institutions. I'm very confident in IMA as a broker. As you listen to today's webinar, I know you will recognize the depth of insurance industry technical knowledge possessed by the IMA team, and you'll come to appreciate their understanding of the unique needs of private higher education, which of course we all know is very important. Please listen intently today and ask questions. You are about to hear the details of a program which will not only save you premium dollars, but will enhance coverage for your school. Again, I'd like to thank all the attendees for your time today. I know it's valuable. I will now turn the presentation over to Steve Nash, Business Development Executive and Relationship Manager for IMA. Steve is responsible for client satisfaction and works closely with the IMA team to ensure expectations are met. Steve, I look forward to the rest of the program.
Thanks so much, Lyon. Really appreciate the coalition and that introduction. And I also want to reiterate what you said. Thank you and welcome to all the state association representatives on the call today, as well as the member schools from around the country. We know your time's valuable again, so thank you for joining us. Before we jump in, just a few housekeeping items here. Our goal is to keep this to 30 or 40 minutes unless Q&A warrants more time at the end. As of now, all attendees are muted, and we'll encourage you to use the chat box to submit questions during the presentation. We'll be monitoring those throughout the webinar, and after we're finished with our prepared remarks, we'll address questions in the chat box and open it up for live Q&A. And lastly, this audio will be shared via the Coalition's YouTube channel and website, and we'll also distribute it via email in the coming days. So let's go ahead and get started here. The topic of today's webinar, as you can see on your screen, is protecting assets and reducing costs, approaching insurance and risk management during a hard market. You know, I don't think it's a secret to anyone on this call that the insurance market right now is extremely challenging, and our goal today is to provide you some tools, some data, and a few alternatives that can hopefully make your next renewal a little less painful. Chad, if you want to go to the next slide of one, in terms of today's agenda, we're going to touch on four main topics. Lion mentioned some of this already, but we'll provide an introduction about IMA and outline the partnership with the Coalition. We'll share a few data points that speak to the hard insurance market. We're going to take a deeper dive on the IMA risk management and property casualty insurance program that Lion mentioned. Again, this program is designed specifically for private institutions, and we'll share how peers of yours have utilized this program to reduce costs and enhance their risk management programs. And finally, we'll outline our complementary preliminary assessment process, which again can hopefully provide you some value heading into your upcoming renewals. Chad, if you want to go to the next slide. Just very quickly to introduce today's presenters, as Lion mentioned, my name is Steve Nash, and my role, along with Nick Burns and Chad DeLine, is to cultivate relationships with risk managers and CFOs at private colleges throughout the country and get them familiar with the IMA story and the program we provide. Blake Wells is IMA's higher education practice leader. He's been with IMA since 1996, and he's been instrumental in getting this risk management program off the ground. Blake is also heavily involved not only with the schools we work with, but also with the state associations across the country, along with the Coalition. You've heard from Lion Cruz, who is the president of the Coalition today. We're very fortunate to have him on the call. I also want to thank Anita from the Coalition for all the work that she does. Finally, we have Ryan Archer on the call, who is IMA's higher education account executive. Before coming to IMA, Ryan held a risk management role for 20 years with a private college in Kansas. So he brings tremendous perspective to our clients and relates to our private colleges very well. He also works closely with our insurance carrier partners and is the day-to-day contact with our client schools. Just a very quick intro on IMA. We have schools from all across the country on the call today. And for those of you not familiar with IMA, we're a national employee-owned risk management and commercial insurance broker. We essentially operate in three different buckets. The first bucket is the risk management and property casualty insurance bucket, which is the focus of today's call. But we also specialize in employee benefits and student and athletic insurance as well. So if you do have questions in those two areas, please don't hesitate to ask on those fronts as well. IMA has over 800 employees nationwide that operate from about 13 offices across the country, and we do have clients in all 50 states. I think the most important thing for me to convey to this group today is that IMA does have a dedicated higher education practice group. IMA as a whole is focused on creating these specialty verticals where the employees in each practice have expertise in that defined area. We have practice groups across many industries: construction, hospitality, energy, to name a few. But the group you have on the call today is the higher education team. So please know we do understand the world you live in and the challenges that you face. Lastly, just a few of the added value services we provide above and beyond simply placing insurance. Claims advocacy: we are your advocate when discussing claims with your insurance carriers, and we help you through that process. Loss control services: we have a dedicated staff that will walk your campus, make recommendations, meet with your facility staff, and collectively draft a tailored plan that fits your institution. Legal contract review: we have a dedicated team of attorneys that can assist with language in your contracts to help mitigate risk. Whether that's insurance provisions or indemnity language, our attorneys can assist with those language in your contracts. And I think it's important to note also, there's no additional cost for these services if you're an IMA client. Hop into the next slide there, Chad. This is the market update slide, and we release this data Oh, it was about 2 or 3 months ago, and some of you may have received this information via email, but just a few data points here that speak to that hard insurance market. If you look at the first bullet, which is through the third quarter of 2020, it shows there's been 12 consecutive quarters with premium increases. I suspect when we get the final data from the fourth quarter of 2020, that's going to make 13 consecutive quarters of increased premiums. I'd also say that other industries are feeling this pressure as well. These increases aren't solely specific to higher ed. As many of you recall, late 2019, early 2020, we had tornadoes, we had hurricanes, we had wildfires that all severely impacted the property market. And then COVID comes along right after that, accelerating the situation. And as COVID continues to linger, the long-term impact on the insurance market is still unknown, but there's no doubt COVID will continue to negatively impact the insurance marketplace. If you look at the chart at the bottom of the page as you begin tackling your 2021 renewals, these are our expectations on rate increases that we have across various lines of coverage. You'll see that aside from workers' compensation, we're seeing pretty significant increases across the board. And keep in mind, this is assuming you have good loss history. So our message to the higher education community for budgeting purposes is to be prepared for those increases and plan accordingly. I think this is a pretty good segue into the next slide, and I'll transition this over to Ryan Archer. He's going to finish up the hard insurance market conversation and then begin to touch on the IMA program and how we can potentially minimize some of those increases. So Ryan, if you can hear me okay, please take it away.
Yeah, absolutely. Thanks, Steve. I mean, this isn't a fun topic, obviously not a new topic. Your broker probably had conversations with you even before last year's renewal about the state of the marketplace. Unfortunately, it does continue to harden. There is some positive. There's a lot of negative news, but there is some positive that we want to share today. And just as Steve said, it's not just affecting higher education. We spend the majority of our time in this space, but IMA being a national broker with clients all across the country in a variety of different industries, there's similar issues. So I'm going to summarize this market update slides. The greatest increases that we are seeing in higher ed is property, educators, legal, umbrella, and also cyber. As we work through these renewals, cyber is another one of those that is increasing basically because of this COVID era or time frame that we're in. So we have been successful in negotiating our higher education renewals to come in 10 to 20% below those market predictions that were on the previous slide. A lot of this reason is us just being proactive. We work our renewals, even the 7-1 renewals, we started those before Christmas. And I credit staying on top of those year round. We have great relationships with all the higher education carriers, and that helps us lead it to better results for our clients. Driving the increases, Steve mentioned the property losses, the cat losses across the country, wildfire, hurricanes, all resulting in over 180 billion in losses. The last week and a half, weather not helping anything as far as in the property, because it just triggers a reduction in capacity and causes reinsurance costs to increase, and carriers pull back from writing property. And those that still continue to write property and impose higher deductibles. Liability claims also on the rise. Some carriers pulling back on coverages such as whether excluding traumatic brain injury or reducing and eliminating sexual abuse coverage altogether. Your educator's legal liability, with the increase in discrimination and wrongful termination claims, that's led to increased rates on this important coverage. This is in higher ed, your directors and officers coverage. Title IX claims fall under the educator's legal policy. Umbrella rates, although we don't see a lot of claims that hit the excess insurance market in higher ed, rates have really increased because of those nuclear verdicts being awarded on claims like we just talked about, the sexual abuse and wrongful termination claims. We really want to look at the limits that you carry on umbrella when it's a soft market and you're getting an extra 15 million of umbrella for nothing. That was great, but how much umbrella coverage do you need? And we benchmark that for our clients. There's a lot of negative information. I hate to harp on all the negative because there really is a positive message in this, and that's what Lion said. The key is really to get through this is having strong relationships with not only your broker, but with the carriers as well. We continue to be proactive with both the carriers and our clients. We've experienced success with this approach, and it's yielding results. It's yielding renewals to come in under those market predictions. So on to kind of our program overview slide. I would say 95% of our clients, we're helping them with all lines of coverage that we put into 3 buckets, you know, the property, your casualty and liability lines, and your workers' comp. This is a very holistic approach, and it's more than just placing insurance. It's a partnership. As Steve mentioned, I spent 20 years at a private institution, and I love higher education, and I would not have came over here to IMA. I love IMA and their team, and I was an insured of theirs during that time, so I know how they work. It's more than just placing insurance. We really do try to be your outsourced risk manager, and it's fun. I mean, the challenging things that you guys face, we dive in and just be as helpful as we can, proactive, and help you through the process. Try to limit your time, energy, and effort. I understand how many different hats you probably wear and the process of insurance. We try to get what information you have on hand already and literally just forward that to us so we can start the process. I like to say you need someone that you can trust to navigate through the insurance process for you, clearly outline the program, and then develop that risk management strategy for your institution. And that's when it becomes more than just placing insurance. Even though we know there's a lot of similarities between peer institutions, each one's different and unique. And each college needs their own tailored coverage that's customized for their institution. We pay close attention to your policies. We read them to find out what's included, what's excluded. There's all sorts of things as far as that we look out for that you need to make sure you know. Do you know that certain carriers exclude athletic participation and the traumatic brain injury that we talked about? One time we were reviewing just this past fall, reviewing their educators legal, and found out that the sexual abuse coverage, I guess I should say, the sexual abuse coverage eliminated, it was just for people under the age of 17. So on a college campus, majority of your population, obviously over 17, if something were to happen, their coverage might not be in place. And it's not just looking at your policies to pick out what's bad. It's also looking at them to make sure that we keep those endorsements or limits or special programs that you have that are great, that you want to hold on to. We do a lot of analysis and review your claims, reviewing any recurring claims so we can develop solutions to mitigate claims in the future. One of our greatest assets is our risk control team. Working with them, that's that specific service plan that Steve was talking about. There's all sorts of things that we've done in the past. I mean, if you think about creating fleet safety programs, return to work programs, even helping your security with the emergency management plan. I mean, whatever it is, we're here to help you. One college we helped bring their outsourced maintenance back in-house. Some colleges it makes sense to have an outsourced maintenance. This didn't. So we help them do that. So it's more than just placing insurance, and it's very customizable to your institution. Cyber, I mentioned, along with it's another one of those areas that seem to really be increasing. As far as when we go through the renewal, it's probably because the cyber claims are on the rise in higher education. As we all know, IT staffs at colleges are usually underserved and operating with limited resources. So it's critical for you to have a policy that comes with great services after the claim. If you have a cyber policy and would like us to review it, we would love to do so. You know, our cyber and active shooter that I'll talk about here in a second is standalone policies. So if you want us just to look at your cyber policy to see how it compares to ours, we'd be happy to do that. Active shooter is another standalone policy. A lot of schools are beginning to purchase this coverage more and more. Active shooter policies, I see it as someone that was on the college side for so long as how cyber was viewed when cyber first came out. I mean, what was the reaction to cyber? One, you either thought you had coverage already through your crime policy, or we all thought, hey, that wouldn't happen to us. You know, they're going for bigger fish than just us. We know now that that's not true. Now everybody buys cyber. Active shooter, a lot of the general liability policies, ours included, has some crisis management coverage that would be in effect for an active shooter. The difference is that GL, crisis management coverage, is only triggered after you're sued. So an active shooter policy, there's a lot on the market out there, but it triggers the day of the event. So the triggers can be different. Some of them have a very narrow definition of a weapon can be used. Some have a fatality account that has to be reached in order for the policy to jump in. Ours is very broad definition of a weapon. It doesn't have to be a gun, as we've seen before. It could be a car or a truck. No one has to die, or no one has to be shot. A threat of an active shooter. If you're in an area where a threat of an active shooter, it's a small news day or a slow news day, you can see where some public relations costs maybe to repair the reputation of what the news media proclaimed happened on your campus. Those kinds of things are great as far as the active shooter, and it's just something that we like to present to our clients as one of those policies that is really gaining traction as we go through there, but there's a lot of different varieties of what an active shooter policy is. On the last thing on this screen, the current spend, those are just averages. It's important to point that out, is we have a lot of colleges that are either below that or some higher. Our goal, which we've been managing, is to come in 10 to 20% below what those market predictions have been. So we're on the risk management slide now.
Hey Ryan, this is Nick. I'll jump in real quick, because one of the things that we've really looked at over the past 12 to 18 months are different ways that we can help private colleges. And what's great about what we do for a living is that no college is the same. And as we look to each of their programs and they inquire about ways that we can help, I think I wanted to throw out a couple of case studies, so to speak, on what the initial inquiry was from the private college and then what the result was. So, two things that really jump out that we've been able to help with is active shooter and cyber, like Ryan mentioned. Those are two areas that are of great concern to universities right now. And as Ryan mentioned, we're more than happy to explore those ideas with universities and private colleges that need help. The other one that jumped out was a school down in Texas that the reason that they initially reached out to IMA was because their wind hail deductible increased to $500,000 over the past year, despite not having any wind hail claims. And this triggered them to go through our preliminary assessment. And the end result was that we put together a program that not only saved them 44% in premium spend, but it also lowered their deductible from $500,000 to $25,000, which was their initial goal. So not only did they get the deductible relief that they were looking for, but we were able to find premium savings as well. Another college that we were able to help out in the Northeast, their initial request was regarding their small D&O placement. Their director and officer premium saw a jump of like 50%, and that gave them enough pause that they decided to reach out to the IMA team. And what we did was we not only reviewed their entire D&O program, but we also took a look at their entire insurance program. And the end result was that we were able to put together a program with lower deductibles, broader coverage, and a 12% reduction in overall premium. This was one of those deals that heading into the end of the year, the process from start to finish was less than 3 months. And we were fortunate enough to help that college save some money as the year wrapped up. The last one I'll reference was a unique one, because with their current broker, the premium increase was modest, call it low double digits. But one of the things that their existing broker was doing was charging them $10,000 for risk control services on top of the commission that the broker typically receives. And in our model, as Ryan mentioned before, all of the risk control, contract review, and claims advocacy is part of being an IMA client. So as we started working with this private college on their insurance program, by the time the review was done, we were not only able to eliminate the $10,000 fee for risk control, but we ended up saving them in overall 11% on their expiring renewal. So Ryan, I just wanted to point out a couple of case studies that we worked on over the past year, just to give the audience some insight into kind of some things to think about, as you're heading into renewal, whether it's deductible or premium increases.
No, I'm glad you did, Nick. I mean, one of those things as far as the college that we worked in and worked through this process that I'm about ready to just kind of visualize this map and how this process works, is one of her biggest compliments she gave the team was she learned more working with us in the last 2 months than she had any time with her previous broker. And that's excellent. That's what we strive to do. So this map here, this risk management strategy, is just a way to kind of visualize all the steps that we have, and it's really a fluid process. So it's not just one segment at a time. A lot of these times these are overlapping, but just to give you a visualize as far as, so where do we start? And that step one, that strategy session is just finding out where your pain is. What's the pain with your current placement? Maybe it's as simple as you don't have a relationship with your broker. Maybe they are just placing insurance for you. Or maybe it's more complex. Maybe you are struggling to find coverage due to some losses. Whatever the situation, we focus on what your needs are and the expectations you have. Then that flows into the design phase where we get into a little bit deeper dive of your current placement. That's when we're going to receive information. We're going to contact carriers. We're in touch with them on a regular basis. Share your story, gain some interest from them as far as what we've gathered, so we can share some conceptuals back to you in terms of what can we do with premium, limits, coverages, evaluate that all together to provide options and finalize what the decision would be best for you moving forward. And then once this program is set up and insurance is placed, well, that's when I say the fun starts. This is when we get to implement the risk control team and create that specific service plan. And as someone that just loves higher education and love my time on a private college campus, this is it. This is setting goals for you for the next 6 months, or what those action items that we need to tackle during these first couple years. It's building the partnership. We keep each other accountable and we help with whatever's needed. Whether it be claims help or reviewing contracts when Steve was reviewing that. So very fluid process. I really appreciate the compliments that our team gets as far as just the expertise. And me coming from a higher education background, that was another example that, hey, you kind of get this. We're not just treating you like insurance people to higher education. No, we've actually been in that seat. So I think that's important. It's a very holistic approach, and we're striving just to make you a better risk, which will ultimately just lower your total cost. So
yeah, thanks, Ryan. Appreciate that. Before I get into this slide, Chad, I think maybe a question or two came through the chat. If that's the case, can you read that question, please?
Yes, I'm happy to. So the first one was, will we be sent a copy of the PowerPoint?
Absolutely. The answer is yes. We will send it out to you directly via email in the coming days, and it will also be posted on the Coalition website. Was there anything else, Chad?
Yeah, there's one more. The other one that came in was, I am not in Colorado or Kansas where you guys are. Is it okay to service my school when I am out of your state?
Yeah, so that's a great question. And Ryan and Nick, feel free to chime in at any time, but we get that fairly frequently. And the short answer is yes, absolutely. We have clients in all 50 states, and traveling is not an issue for us. It's actually one of our strengths. And so there are no issues with servicing wherever you are in the United States. So just let me jump into this slide here. I know this slide may look a little scary and busy, but this is an example of what our complimentary preliminary assessment looks like. We know a lot of you out there wear many hats, don't have time to take on new projects. So this assessment is designed to be very easy on your end. Essentially, we'll request whatever insurance information you have at your fingertips and readily available. This could be your last renewal. This could be electronic policies. This could be loss history. Maybe you have a summary of coverages. anything of that nature. And then we'll take that information and benchmark it against what we're seeing with our strategic partners. This assessment benchmarks not only premiums, but it also benchmarks limits and deductibles and potentially creates some efficiencies within your program as well. I'll also add there are times after we complete an assessment, we find the insurance program is in good shape and have very few recommendations. And if that's the case, we'll certainly share that with you as well. That's really it from a high level. Ryan, do you have anything you want to add to that?
No, I'm glad you said that at the very end, because it's not just picking out the bad, it's also highlighting the good and making sure that that stays. So whatever we can do, we obviously want to make this easy for them, limit their time, limit their resources. I understand the challenges you guys face, and there's never enough time. We're taking that off your plate, and I want to be an extension of your office. I love being on college campus, and I love being able to work for all these different colleges instead of just one. So I hope to get the opportunity. We obviously love relationships and want to create partnerships. So whatever we can do, we'd be happy to help.
Thanks, Ryan. Chad, if you don't mind, hop into the next slide, please. I have us as about 30 after the hour. So again, we want to be cognizant of your time here. As we begin to wind down, we've included a few quotes from current clients on this slide that I think speaks to the holistic kind of approach Ryan mentioned earlier. As everyone kind of begins to formulate any potential questions, again, please feel free to use the chat box. I think this is a good time to bring in IMA's higher education practice leader, Blake Wells. You may recall at the start of this, Blake he was instrumental to this higher ed team and getting this program off the floor, and really is the heartbeat of this program. Blake, if you can hear me okay, do you have any comments do you want to add?
Yeah, thanks, Steve. Can you hear me okay?
Yes, I can.
Great. Well, I just, those are awfully kind words, Steve. I appreciate it. We have spent a lot of time on developing this program to try to fit the needs of the smaller private colleges. We're thrilled to be a part of the coalition suite of program offerings that Lion and Anita and their team offer. And it's very rewarding when we can help the respective private colleges in our part of the world that we deal in every day in the risk management side. And it's, Ryan spoke to it, and I know everybody's kind of in short-term mode looking at budgets, and that's important, and we can help you there. But one of the points is we really have taken a long-term approach to this program. So anytime you set good foundation with risk management in your insurance program, it's going to stand the test of time. So, we look at our partnerships as a long-term partnership, and we look forward to the opportunity to work with everybody here on the call at some point.
Yeah, thanks, Blake. Appreciate that.
Hey, Steve, we have a couple questions that have come in.
Oh, great. Yeah, fire away.
So we have one: in your programs, are you pooling colleges so that they share limits, or does each school receive their own individual policies? I guess I can pass it off to Blake.
Sure, I can take that one. Be happy to. We get that question a lot. So a lot of you are probably familiar with risk purchasing groups or captives. This is not a risk purchasing group. This is not a pool. This is not a captive. So each school would have their own policy and able to customize their limits and deductibles according to their desires. Where the group comes in and the group program comes in is we're able to take the economies of scale, leveraging our dozens of colleges into the marketplace, and we get best in class products, the coverages, and then the premiums because of that. But we found that a program in that structure is much more nimble than if you try to put a huge risk purchasing group or a pool. There's several large national programs out there for private colleges. They're very good, but they're kind of running into some trouble now with the hard market, is that it's a one size fits all. And if one college has a bad claim, then everybody kind of suffers. That's part of that pool. So ours is not structured like that. So the school would have its own policy, its own limits, and its own ability to customize.
Thanks, Blake. We have another one. Is there a sweet spot for your ideal higher education client, i.e. number of students, endowment size, annual revenue, etc.? If not, what is your typical client size, number of students, and endowment?
I'd be more than happy to take that again if nobody else wants to. I mean, you know, it really mirrors the average size within the coalition and with a lot of private colleges. So, you know, we have colleges larger than 5,000 enrolled, but by and large, most of our private colleges are somewhere between, you know, 2,000 and 5,000 enrollment. There's really no limit though on how big or how small the school can be that we can work with. We have schools as small as 400 students, and we have schools as large as 20,000 students. But we're really focused on the private colleges, and that's why it's been such a good fit with the coalition.
Thanks, Blake. We have one more coming in. Do I need to accept standard deductibles and coverages, or may I customize for my own insurance needs?
Everything's customized. Yeah, everything's customizable. Everything's customizable. This isn't a one size fits all. So we look at what the deductibles that would be best for you. Look at multiple options as far as deductibles go, and see what the difference is. I mean, there's times when we have got new clients. We just had one in Alabama last year where they had a low deductible, and it was just beneficial to take on more of a higher deductible. So we work that process with you, and each individual is different. I'll just reiterate just a little bit more information on the last question, since they said sweet spot. That Blake was right in everything he said. That sweet spot is really that 400 to 1,700 to 22. I'd say 400 to 2,200. If you a student base, if you want to say a sweet spot where there's a lot of schools in that range.
Yeah, thanks, Ryan. Chad, any more that came through, or does that clean up the chat box there?
Yeah, just one more. How much time does this assessment take, and what is the cost, or does it cost anything?
Blake, you haven't fielded enough questions yet. I'll defer to you.
Sure, my pleasure. Well, it's free. I'll answer the second part. It's complimentary, so there's no cost to it, and it shouldn't take much more than 30 minutes to 45 minutes of your time on the front end to gather either last year's proposal or some loss information. We have about 6 or 7 items, kind of the nice to haves, and we can forward you that list if you're interested. And then we do the assessment, and we follow back up with another 45-minute to an hour discussion, just kind of show you what we found and really the high level and some potential opportunities for improvements in the program. And at that point is when you can decide if it's worth investing a little more time and energy to this from the school side. You know, most of you here aren't just a full-time risk manager, so you wear a lot of different hats, and we understand and appreciate that. So the front-end assessment is we try to make it as effective and as efficient as possible, so you can say, okay, is it worth putting more time, energy, and effort into this program, and what are my returns going to be if I do that?
Yeah, thanks, Blake. And on this final slide, kind of coincides with that last question. I would say that I think our call to action today is that if there's any schools that are on the call that are interested in seeing that preliminary assessment with their information benchmarked, interested in having their current policies reviewed, or maybe want to learn more about IMA services and being that true outsourced risk management partner, please reach out to Chad. His phone number and his email are on the screen in front of you. We can set up a time to chat and kind of go from there. If there are no final questions, we'll go ahead and wrap this call up. Again, the slides from today and the audio will be shared via email and the Coalition site. Another big thank you to the Coalition, and thank you to everyone for attending today. Have a great afternoon.